Hi guys, welcome to Srestha. Good morning, good afternoon, good evening to all. As you know, I'm Pawan Kumar, faculty for taxation, and my part of syllabus concern at the CMA Inter, I'm going to deal with paper 7. Paper 7. Actually, paper 7 is taxation. The taxation consists two sections. That is the taxation paper divided into two parts. Section A, section B. And section A is for 50 marks, that is direct tax, and section B concern indirect tax or indirect taxes. It is also be for 50 marks. So totally direct tax is for 50 marks and indirect tax is also for 50 marks. Now in today's session we are going to start with indirect taxes. So totally paper 7 taxation paper, it having two sections, section A and section B. Section A is for 50 marks and section B is for 50 marks, out of which we are going to start with indirect taxation. So section B, indirect taxation, 50 marks. It consists, concept of the indirect taxes is for 5 marks. That is simply the basic background and introduction to the indirect taxes is for 5 marks. And the next, goods and service tax laws concerned, 35 marks. And the next one, customs act, is for 10 marks. Totally it is 15 marks, 50 marks of paper. Now in today's session, just I am going to start with introduction to the GST, that is concept of indirect taxes. First we have a knowledge about the indirect taxes, then we will discuss the GST Act and Customs Act. Is it clear? Right. And before starting off my lecture, my classes, my request is please participate in the class itself. Even though it may be an online class, please feel like it is as a physical class. When I am asking a question, please try to give an answer. And when I am saying that please solve this problem, you have to pause the video and you have to put your efforts for completion of the problem. In such a manner, there should be an active participation. So when there is an active participation, at the classroom itself, you can learn. Not only understanding, you can learn at the classroom itself, right? Before starting off the basic concept to the indirect taxes, first of all we have to know what is the meaning of the tax. Have you come across the word of the tax? Yes sir, definitely. What type of the taxes you come across? Income tax, GST Act, GST taxes, and any other? The state government levied scrap tax, any other? Wealth tax, any? So you may come across all these type of the taxes. Why the government levying these taxes on the public? And what is the meaning of the tax? What is the basic purpose of levy of these taxes on the public? Right? Now the tax means, tax is a financial burden levied or imposed on public by the government for providing of services. Simply we can say that we are getting different types of the services from the government. For that purpose, the government charging or levying a tax on the public. and the government levy these type of the taxes on the public in the name of income tax, GST, wealth tax, and other. So see here, tax is a financial burden levied or imposed on the public by the government for providing services. Now, what type of the services the government providing? What type of the services we are getting from the government? What type of the services we are providing to the government? Sorry, what type of the services government providing to the public? Number one, we are getting services of hospital, that is healthcare services, and the second one, security. Suppose at the border we are getting the services of the army. Suppose within the state we are getting the services of the police. And the next one, food. We are getting food at ration shop at concessional rate. As you know, the rice bag or the kilo rice price, it is 1 rupee or 2 rupee, right? In such a manner we are getting at concessional rate. In the open market, actually the price of the rice, it is around 40 rupees per kg, whereas the state government providing such services are supplying rice at the price of 1 rupee or 2 rupee. Such concessional rate of goods are provided by the state government. Now, for providing of services of hospital, security, food, and education, infrastructure, all these services has to be provided by the government. Hospital, security, food, education, infrastructure. Education concern, as you know, up to intermediate or 10th class or even for degree, when you are getting government seat, it could be a free of cost. And next, the infrastructure concern. Government has to construct different types of the bridges, canals, dams, etc. Now, for providing of all these type of the facilities, government need a fund. And otherwise, I can say that these type of the services are provided by the government to the public. So when the government providing these type of the services to the public, government has to collect some amount from the public, that is tax. Whatever the amount government collecting or imposing a financial burden in the name of the tax, it is a consideration. It is a consideration. And again, I am using the word of the consideration here generally. In technical, we will discuss later. So here, for providing of services by the government to the public, government levying or imposing tax on the public, and the government collecting in the name of the income tax, GST, wealth tax, and other. And do you know what is the amount of the Indian budget? What is the Indian budget? What is the amount the government going to incur for providing all this type of the social welfare activities? Approximately the budget of the Indian government, it is 40 lakhs of crores. 40 lakhs of crores. Actually, it is around 39 point some change. Just rounded off, 40 lakhs of crores. Now, from where the government has to get this much of the revenue? Sir, government levying tax on the public, but where the government collecting only approximately 25 lakhs of crores from the public in the name of tax. So this is the area where you are going to work. The tax concern, it may be a direct tax or indirect tax. Approximately the government getting 25 lakhs of crores only from the taxation. The balance of 15 lakhs of crores from the government business and government stamp duties, government licenses, etc. So consider the situation, how the government can get the 40 lakhs of crores and to run the business and to provide the social welfare activities to the public and for the development and prosperity of the country on yearly basis. Today we need 40 lakhs of crores. So that is the situation why the government levying taxes on the public. And suppose when you are considering the Gulf countries are not that much levying taxes on the public. Reason, the government is in a position to generate the revenue. Where the government is in a position to generate the revenue, the government won't charge or levy taxes on the public. As you know, the Gulf country getting revenue in the form of tourism and petroleum. The Gulf countries are, the government itself is in a position to generate the revenue, so that such countries are not in a position to levy the taxes on public. But whereas the Indian government concerned, Indian government also doing the business, as you know, in the name of the BSNL, LIC, ONGC, SBI, and IRCTC. All these are the businesses of the government. Yes, government also getting the revenue, but it is not sufficient for social welfare activities, development and infrastructure of the country. Reason, the budget of the country it is 40 lakhs of crores. You see, so even the government doing some business, it is not sufficient for administration of the country. For that reason, forcibly the Indian government has to charge a tax on the public. A tax on the public. That is might be in the nature of the direct tax or indirect tax. Sir, what is the meaning of direct tax and indirect tax, and what are the differences between direct tax and indirect taxes? We will discuss later. We will discuss. But before that, first of all, you have to understand tax is a financial burden levied or imposed by the government for providing services of like hospitality, security, sorry, no, hospital, it's not the hospitality, it's a hospital, and security, food, education, infrastructure, etc. For providing of all these type of the services, government need a fund, so that the government levying taxes on the public in the name of the direct tax or indirect tax. Those type of the direct tax or indirect taxes are income tax, GST, wealth tax, custom tax, and other customs duty and others. And as we discussed, approximately the government need a 40 lakhs of crores of revenue to run the or to administrate the Indian government. That is nothing but for providing of the social welfare, development, prosperity of the country. And out of which approximately 25 lakhs of crores government getting in the name of the tax. Is it? No. So I think so you got a little bit knowledge about the tax. And one more thing you have to remember, tax is not a voluntary contribution. It's not a voluntary contribution. It is an enforceable contribution. It is an enforceable contribution which has to be made in compliance with applicable laws. So tax is not a voluntary contribution. It's not a voluntary contribution. Suppose on occasion of the Vinayaka Chauthi, you may give some donations like as for this year 1000 rupees, 500, at your discretion, at your choice, you may. Is it? And the tax is not like that. It's not a voluntary contribution. It has to be made mandatorily. Mandatorily you have to pay. Compulsory you have to pay. That too in compliance with the act. That is, in pursuance of the act, you will come across what is the amount of tax we have to pay, and that much of amount you have to pay. Compulsory, mandatory you have to pay in pursuance of the act. That is nothing but by referring to the act, we have to compute, we have to identify, we have to calculate what is the amount we have to pay in the name of tax to the government, and such amount we have to pay as per applicable laws. So tax is not a voluntary contribution. It is an enforceable contribution which has to be made as per applicable laws. Is it? I think so. We got a small overview about the tax. Now we are going to discuss what is the meaning of direct tax and indirect tax. So direct tax and indirect tax meaning concern, directly we can jump into the definition or meaning of the direct tax or indirect tax, but instead of that, let me go with a practical example. In that practical example, we will discuss what is the meaning of the direct tax and indirect tax, and later on we will discuss what are the sentences given, right? So first, the direct tax and indirect tax, and as you know we are going to start with indirect taxes, no? All right. When I am discussing indirect tax, whatever the examples I am considering here, more and more emphasis will be on indirect tax. And when I am teaching direct tax, there more and more emphasis will be on direct tax. Is it clear? So first of all, we are going to learn what is the meaning of the tax and what is the difference between direct tax and indirect tax. Okay, but whatever the examples I am considering here, I will explain what how the direct tax is different from the indirect tax and how indirect tax could be different from the direct tax. But my emphasis will be more and more on indirect tax here. And while I am teaching direct tax, my emphasis will be on direct taxes. Okay. So suppose take an example here. Where a person is a cost accountant, he is rendering services to the company. Suppose take an example, Reliance Limited. He is providing services of accounting and auditing services. On providing of those services, Reliance Limited is willing to pay consideration of 30 lakhs. What is the consideration? 30 lakhs. In this situation, from the indirect tax perspective, the person who is supplying the good or service is known as supplier. First, I am taking a commercial transaction as an example, and as you know, indirect tax concern, generally indirect tax will be levied on goods or services. Goods or services or both. So out of which I am taking an example of a commercial transaction in relating to the service. Now you are the person who is a qualified cost accountant. You are rendering services to the Reliance Limited, and the nature of service it is accounting and auditing. On providing of accounting and auditing services, you are getting the consideration of 30 lakhs. Now the same context I am explaining in technical words. Now the person who is supplying the service or a good is known as the supplier, and the person who is receiving the goods or services is known as recipient. These are the technical words which are used under the indirect tax, that is GST. Generally, you may say that the person who is supplying the service is known as service provider. He is the service giver. And the person who is receiving the service, generally we can name as service recipient, right? But under the GST, you have to use the word of the supplier and recipient. Is it? Now here the cost accountant is a supplier. He is providing the services of the accounting and auditing, on which he is getting the consideration of the 30 lakhs. Now under the indirect tax system, the person who is supplying the goods or service, whatever the consideration is charged is known as value of supply. And apart from the receiving of the consideration, he has to collect the tax. Now here I am considering the tax rate just generally, and whatever the applicable rate of GST, applicable, no need to remember. Reason, in India we have a lakhs of goods and lakhs of services, and what is the rate of GST applicable to a particular good or a particular service, no need to remember. And while you are solving the problem, at the problem itself, the examiner will provide the rate of GST. So that don't remember the rate of GST applicable to a particular service or particular good. Now here just I am taking a practical example. For that reason I am considering the practical rate of GST. Are you getting my word? Yes. Now here the value of supplied is 30 lakhs, and apart from that the supplier has to collect 18% of GST. What is 18%? 30 lakhs into 18%, 5 lakhs 40,000. So totally 35.4 lakhs. Now the cost accountant, he renders services for the worth of the 30 lakhs, but apart from that he has to collect GST, indirect tax, that is 5.4 lakhs. Out of the 35.4 lakhs, 5.4 lakhs has to be remitted to the government, that is pay GST to government. How much? 5.4 lakhs. And the balance of 30 lakh rupees goes to his own pocket. 30 lakhs goes to his own pocket, and 5.4 lakh rupees has to be remitted to the government. That is the nature of the indirect tax. Always in the indirect tax, the person who is supplying the good or service, he has to collect tax from the recipient, and such tax has to be remitted to the government. Is it clear? Suppose take another example. When we are going to a restaurant, there the hotel person, right? The hotel person will provide food. Assume it is as a food. When the hotel person providing food for us, there the hotel person is the supplier, and we are the customers, known as the recipient. And again at the starting stage itself, I am using technical words. Reason, after completion of the introduction to the GST, you have to get a flavor about the indirect taxation. And as you know, when you are learning the accounting subject, first you will learn journal entries, ledgers, trial balance, etc. And when you are getting an accounting flavor, yes, then you can easily solve any type of the problem that is related to any type of the business. Like this, first we have to get the indirect tax flavor. For that reason, I am taking ample example or different types of the examples to give a flavor of the indirect tax. You see? So here, when you are getting services from the hotel person is a supplier and you are the recipient. Now, when the value of food is 1000 rupees, apart from that, he will collect a tax called GST at the rate of 5%, 50 rupees, totally 1050. And again, I am saying that please don't remember the rate of GST applicable to the particular good or service. It is not forming part of your syllabus. You see, now you have to pay 1050 rupees, out of which 50 rupees remitted to the government and 1000 rupees goes to his own pocket. And when you are a cost accountant, there you are the supplier, and when you are going to a restaurant, you became a recipient. But wherever it may be, first we have to identify who is the supplier and who is the recipient. Always the supplier collect consideration and tax from the recipient, and the consideration goes to his own pocket, and the tax amount has to be remitted to the government. That is the nature of the indirect tax. Across the India, anywhere if there is any supply of the good or service, the supplier has to pay the consideration and tax amount, and the consideration will go to his own pocket and tax amount has to be remitted to the government. The same situation will happen when you are going to a movie. Suppose take an example, the movie ticket price is 200 rupees and 36 rupees is a GST, 236. There the cinema theater owner will become a supplier and the person who is a visitor or the customer is a recipient. You see, now the cinema theater owner being a supplier, he will collect consideration and GST, 200 rupees of consideration and 36 rupees of GST. 200 rupees will go to his own pocket and 36 rupees has to be remitted to the government. Is it? And if you are taking any type of the example, in relating to the supply of the good or service, always the supplier will get the consideration and GST. Consideration goes to his own pocket and GST has to be remitted to the government. Is it clear? That is the beauty of the indirect tax. That is the beauty of the indirect tax. What is the beauty? The person who paying the tax is not paying from his own pocket. He is collecting from some other person's pocket. Is it? So, see here, the supplier is liable for payment of the GST, but he is not paying from his own pocket. It is collected from the some other person. That is called the supplier have an incidence of tax. Incidence concern liability to, whereas the recipient concern he have a impact, that means liability to bear. See here the supplier has to pay, but he won't pay from his own pocket. He will collect from the recipient. Is it? So that the recipient have an impact lies on recipient, that is liability to bear. Otherwise we can say the supplier have an administrative burden. What is that called? Administrative burden. So why the supplier have an administrative burden? He has to pay tax to the government. That is an administrative burden, but it will borne by the recipient, so that financial burden lies on the recipient. Is it clear? This is the nature of the indirect tax. This is the nature of the indirect tax. Incidence lies on one person and impact will be lies on another person. And just when you are reading the incidence lies on one person and impact will be lies on another person, you may not be in a position to imagine the situation. So that with this example, I am making you to understand the concept of the incidence and impact. Wherever there is a supply of the good or service, identify who is the supplier and who is the recipient. Supplier is liable for payment of GST. So incidence lies on supplier, and the supplier has to collect such tax from the recipient. That means impact lies on recipient. Incidence lies on supplier, impact lies on recipient. So supplier have an administrative burden and the recipient have a financial burden. That is the nature of the indirect tax. Are you getting my word? And indirect tax is a transaction based tax. Whenever the transaction taken place on which we are liable for payment of the tax. Suppose take another example. If you are intended to buy a mobile phone, when you are purchasing mobile phone from suppose take an example, Big C showroom, there the Big C showroom person will become supplier and you are the recipient. Whatever the worth of mobile phone you are purchasing, on which you have to pay tax, irrespective of the profit or loss. Whether the Big C showroom person selling the mobile phone, whether it may be a profit or loss, irrespective of the fact, what is the value at which the transaction taken place, on which we are liable for payment of the tax. Are you getting my word? So indirect tax is a transaction based tax. Why it is a transaction based tax? What is the value at which the transaction taken place, on which we are liable for payment of the indirect tax. Is it clear? So this is one of the beautiful example for indirect tax. Now we are going to discuss the example for the direct tax. See here, cost accountant, he collected 30 lakh rupees and GST, and GST amount remitted to the government, and 30 lakhs goes to his own pocket. Now where indirect tax transaction is over, there the direct tax transaction will begin. Now the cost account, he earned an amount of, that is income of 30 lakhs, and when he is getting 30 lakh rupees of fee and he has to incur some expenditures, as you know. What are those type of the expenditure? You have to participate. What type of the expenditure he has to incur? He has to pay salaries, rent, membership fee and stipend to the students. Is it electricity, stationery, and other expenses? Let us assume salary is 2 lakhs, rent 1 lakh, and again membership fees around it could be 20,000 rupees. But for our convenience, just I am making it as a 1 lakh. Okay. Next stipend concern 2 lakhs, electricity bill 2 lakhs, 2 to 4, 5, 6, 7, 8, and stationery other expenses 2 lakhs. So after reducing of all these type of the expenditure, he is getting a net profit of 20 lakhs. This is called total income, on which the person who is a cost accountant, he is getting an income of 20 lakh rupees. He has to pay income tax on income. Sir, already paid indirect taxes now. Yes, already the cost accountant, he paid indirect tax to the government, but such indirect tax not paid from his own pocket. It has been collected from the recipient. Is it? See here. He has collected from the recipient and remitted to the government. So that here the cost accountant, the supplier, he is not paid tax from his own pocket. Now, after getting of 30 lakh rupees, he has to claim all the business expenditure. After claiming of the business expenditure, whatever the income he is getting, that is called total income, on which he has to pay income tax. On which he has to pay income. Sir, what is the rate of income tax? We will discuss later. Suppose approximately, let us assume he is liable for payment of the income tax of 4 lakhs. We don't know what is the calculation and how much we have to pay. Just I will explain the slab rates and what is the rate of income tax applicable to the different persons. I will explain. Just assume here the 4 lakh rupees of income tax he has to pay. Now he may argue, sir, already I paid indirect taxes. Sir, indirect tax not paid from your own pocket. It has been collected from the recipient and remitted to the government. Now, whatever the amount he is getting, out of which he has to reduce all the business expenditure. After reducing of the business expenditure, whatever the amount he is getting, it is called total income. It is called total income, on which he has to pay income tax to the government. Now see here the beauty of the income tax. Who has to pay? The cost accountant. He has to pay, and that too from his own pocket. He has to pay, that is incidence, and from his own pocket, impact. So incident and impact both lies on the same person. That is the beauty of the direct tax. So direct tax concern, incidence and impact both lies on the same person. Here he has to pay, that is a 4 lakh rupees of income tax. He has to pay, that too from his own pocket. Are you getting my word? But whereas indirect tax concern, he has to pay, but he won't pay from his own pocket. He will collect from the recipient. Is it? So that is the basic difference between direct tax and indirect taxes. Right? Under the direct tax, incident and impact will be lies on same person. But whereas indirect tax concern, incidence lies on one person and impact will be lies on another person. That is the beauty of the indirect tax. Is it clear? And one more thing I can say, the direct tax is a progressive nature. What is that? Progressive nature. Something it have a positive attitude. What is that positive attitude? Progressive nature concern, if a person income increases, then only the tax portion will be increased proportionately. But whereas indirect tax concern, irrespective of the rich or poor, irrespective of the profit or loss, you have to bear the equal amount of the indirect tax. Sir, how it could be? Suppose take an example. When you are purchasing a soap from the shop, let us assume soap price it is 30 rupees and tax 35 5 rupees, totally 35 rupees. MRP 35 rupees. It consists 30 rupees is the value of the soap and 5 rupees is the tax. Where a poor person purchasing such soap, value could be 35. That means the poor person also has to bear 5 rupees of the indirect tax. Where the same soap has been purchased by a rich person like you, still he has to bear the 5 rupees amount of the indirect tax. Is it clear? That is the reason indirect tax is a regressive nature. Indirect tax is a regressive nature. But whereas direct tax concern, it is progressive nature. Why it is progressive nature? If a person income increases, then the tax proportion will be increased. If your income is low, the payment of the tax also be low. That is the reason the direct tax is progressive nature and the indirect tax is regressive nature. Is it? And one more thing, indirect tax has to be paid on transaction basis. What is that? Transaction basis. Indirect tax is payable on transaction basis. If there is a transaction, if any transaction taken place on which we have to pay tax, that's it, irrespective of the profit or loss, and we should not reduce any expenditure incurred. Directly, what is the value at which the transaction taken place on which we have to pay indirect tax? I am purchasing a shirt, we have to pay GST on value of the shirt. I am purchasing a mobile phone, we have to pay GST or indirect tax on value of the mobile phone. Irrespective of the fact what is the amount of profit getting by the ready-made garment shop person or mobile shop person, we have to pay tax on transaction value. But whereas direct tax concern, we have to pay tax on income. How we can arrive to the income? Whatever the proceeds is getting on sale of the good or rendering of the service, right? He has to reduce all the business expenditure. After reducing of all the business expenditure, whatever the profit it is getting as per accounts, the amount will be treated as a income. On such income, we are liable for payment of the income tax. So while payment of the income tax, we can reduce all the business expenditure. So it is not the transaction based tax, it is a tax on income. But the indirect tax, it is a tax on transaction value of the good or the transaction value of the service. Is it clear? So in this session, just we discussed first what is the meaning of the tax. Right, first of all, we are discussing the paper 7, taxation. Taxation have a two parts, section A, section B. Section A, direct tax, section B, indirect tax. Out of which we are starting with indirect taxation. And before starting of the indirect taxation concept, we discussed what is the meaning of the tax. Is it? And thereafter we discuss what is the meaning of the direct tax and tax. Is it clear? And one more thing you have to remember, in indirect taxes, I am going to start with GST, Goods and Service Tax Act 2017, CGST Act 2017. That is Central Goods and Service Tax Act 2017. What is that? Central Goods and Service Tax Act 2017. It consists approximately 174 sections. 174 sections. At the CMA inter level, approximately we are going to learn 50 sections. 50 sections. If you thoroughly follow my classes, at the classroom itself, you can pronounce all these 50 sections. Section by section. Section 1, 2, 3, 4, like this. Totally 50 sections we will learn at the classroom itself. Is it clear? So in today's session, just we discussed the basic introduction to the taxation and the concept of the indirect tax and direct tax. That's all for the day. Remaining concept we will discuss in the next class. Have a nice day. Thank you. Hi guys. Good morning, good afternoon, good evening. Right. In the previous class, just we discussed about the meaning of tax. We discussed like tax is a financial burden levied by the government. It may be in the name of the tax, fees, penalty, etc. on persons' income or their wealth. And why the government levy tax on public? As you know, government has to provide various social welfare activities. For that purpose, government need a fund. When the government need a fund, government must be in a position to generate the revenue. Might be by doing of the business or any other activity. But where the government is not in a position to generate the revenue, so that the government levying taxes on the public. It may be in the name of the direct tax or indirect tax, etc. So likewise, we discuss the meaning of the tax, and apart from that, we discuss tax is not a voluntary contribution, it is an enforceable contribution which has to be made in pursuance of the law. The second one, we discuss the differences between direct tax and indirect taxes. Right now in this session, we are going to discuss the concept of background of indirect taxes. As you know, GST came into the picture with effective from 1/7/2017. GST came into the picture with effective from 1/7/2017. Then before introducing of the GST, what type of the indirect taxes we have? What type of the indirect taxes we have, and what was the levy point for levy of those type of the indirect taxes? Is it? And one more thing you have to remember, actually in the year of the 1954, France was the first country which introduced the GST. Approximately we taken nearly 60 years for introducing of GST. And in the meanwhile, approximately more than 160 countries has been adopted. More than 160 countries. As you know, in world approximately we have 200 countries, where 160 countries has been adopted. So it will give an indication that almost the majority of the countries has been adopted the GST. We are too late. We are too late. So whatever the situation it may be, the GST came into the force with effect from 1/7/2017. But before introducing of the GST, what was the indirect tax structure? See here, tax and the levy point. Next, revenue of, that is revenue enjoyed by the first one, it is central excise duty. Central excise duty. Central excise duty was levied by the central government on manufacture of goods. On manufacture of goods. It was levied by the central government. So if there is any manufacture activity, we were liable for payment of excise duty. Suppose take an example where a person manufacturing a mobile phone at the factory. So where a person doing manufacture is a factory. So where a person manufacturing mobile phones at the manufacture stage itself. At the manufacture stage itself, the manufacturer is liable for payment of excise duty. Now here the manufacturer may argue, sir, I am not selling the product, no, just the manufacture activity is over. The central government will say, yes sir, it's enough. You are liable for payment of the central excise duty only on manufacture. Is it clear? And the second one, on manufacture of the goods, when you are selling the good within the state, we were liable for payment of the VAT. So that VAT was levied on intra-state sale. See here, where a manufacturer manufactured the mobile phone at the manufacturing stage itself, we paid central excess duty to the central government. While you are loading the goods into the vehicle, when you are loading the goods into the vehicle and at the time of the journey, now the state government will stop you. Sir, what you are doing? Sir, just we manufactured the mobile phones and we are going to sell in the open market. And where you are intended to sell? Sir, within the state. Within the state. Now the state government will ask you to pay VAT, that is value added tax or sales tax also. Now you may argue, sir, at the time of the manufacture itself already I paid central excess duty, sir. Yes, sir, you are right. You are liable for payment of the central excess duty at the time of the manufacture. And when you are selling the same manufactured good within the state, you are liable for payment of the VAT to the state government. Okay. So a manufacturer on a single product, he has to pay two types of the taxes. First one, it is excess duty. At the time of the manufacture, the manufacturer is liable for payment of central excess duty only for manufacture of the goods. And when he is selling those goods within the state, he is liable for payment of the VAT, a value added tax or sales tax to the state government. Is it clear? So that VAT was levied by the state government. And the third one, CST. CST concerns central sales tax. Central sales tax was levied on interstate supply, interstate sale. Actually, it was levied by the central government. Central sales tax was levied by the central government, but collected and enjoyed by the state government. So finally, I can say that it is a revenue of the state government. It is the revenue of the state government. See here, the same way, where a person manufactured a good, at the time of the manufacture itself, he is liable for payment of the central excise. And when he is selling the same goods within the state, he was liable for payment of the VAT to the state government. Suppose when he is intended to sell these goods to the any other state person, that is, he is intended to remove these goods to the other state. Suppose take an example, goods are manufactured in Andhra Pradesh, those are sold to the Tamil Nadu. Goods are manufactured in Andhra Pradesh and those goods are sold in the state of the Tamil Nadu. It is interstate sale. On interstate sale, again he is liable for payment of the CST, that is central sales tax. Simply we can say, after manufacture of the goods might be sold within the state or in between two states. At the time of the manufacture, the first you have to pay central excess duty. And the second one, if you are selling those goods within the state, you are liable for payment of the VAT, or when you are selling the same goods to the other states, there you are liable for payment of the CST. So the second option could be either VAT or CST. If it is intra, along with the central excess duty, you have to pay VAT. If it is an interstate sale, along with the central excess duty, you are liable for payment of the central sales tax. This was the concept in relating to the goods under the earlier indirect tax system. Are you getting my word? The next. Now, suppose this is the picture of the manufacturer. The first stage, it is the consider it is as the manufacturer stage, and consider this stage as a wholesaler. The wholesalers are purchasing goods from the wholesalers, right? So while purchasing of the goods by the wholesalers, they were liable for payment of the central excess duty and VAT or CST. That means if the wholesalers are purchasing within the state, they have to pay central excise duty as well as VAT. Is it? So wholesalers are purchasing the number one within the state or from other state. When the wholesalers are purchasing goods within the state, they were liable for payment of the central excise duty plus VAT. When the wholesalers are purchasing other state, then again they are liable for payment of the central excise duty plus VAT or CST. Which one? Central sales tax, CST. Why? It is an interstate supply. Is it clear? Wholesaler purchasing goods within the state, he was liable for payment of the central excise duty and VAT. Where the wholesaler purchasing goods from the manufacturer who is located in other state, he was liable for payment of the central excise duty and CST. Is it clear? And now the wholesaler is willing to sell these goods to a person who is located in same state, or they are intended to sell to a person located in other state. And again, when they are intended to sell those goods within the state, they are liable for payment of the VAT. When they are intended to sell those goods to the other person, they were liable for payment of the CST. Here being they are the traders, no more central excise duty. Central excise duty end only at the time of the manufacture. We have to pay central excise duty only at the time of the manufacture. Subsequently, those persons, that is the wholesaler, retailer, traders, they were liable for payment of the either VAT or CST. VAT concern value added tax on intrastate supply. So located in same state concern intrastate. Person located in other state concern, this is interstate. This is absolutely 100% of the tax structure before introducing of the GST. This is the concept, nothing else in relating to the goods. Again, see here, where a person manufacturing a good, he was liable for payment of the central excise duty. After manufacturing of the goods, those goods sold are within the state, then we are liable for payment of the VAT or sales tax. If the manufactured goods are sold to some other state, there we are liable for payment of the CST. Is it clear? The next, the manufacturer selling goods to within the person who is located in the within the state, and the manufacturer selling the goods a person who is located in other state. When the manufacturer selling goods within the state, the manufacturer will collect central excise duty and VAT from the wholesaler. And when the manufacturer selling those goods to a wholesaler or a business person located in other state, there the manufacturer has to collect central excise duty and CST from the wholesaler, and it will be remitted to the government. Central excise duty remitted to the central government. VAT will be remitted to the state government. Again, central excise duty remitted to the central government. Central sales tax remitted to the state government. Right. Now the second picture, wholesaler. When the wholesalers are the selling goods within the state, then they will collect just VAT. And again, the wholesalers are selling goods to a person who is located in other state, they will collect CST. Likewise, when subsequently any sale taken place, just we are liable for payment of the either VAT or CST. It will be depend upon the nature of transaction. That was the position. Is it clear? Now what is happening, sir, under GST? Now there is no concept of the manufacture, sale, etc. Just today only we are liable for payment of the GST. When goods are moved from one person to another, one person to another person, if goods are moved and there is whether such movement may be a manufacture, trade, sale, etc., whatever it may be. Now there is no such type of the segregation. Simple. When goods are moved from one person to another person, then you are liable for payment of GST. Is it clear? And observe the situation. What is the levy point for manufacture? Sorry, excess duty. The levy point, central excess duty. Into the central excess duty, the levy point was manufacture of goods. And what is the levy point for VAT? Intrastate sale. And what was the levy point for CST? Interstate sale. Now, what is the levy point for GST? What is the levy point for GST? What is the levy point for GST? Supply of goods or service. Wherever there is a supply of the goods or services, when goods are moved from one person to another person, yes, it is a supply, there they are liable for payment of GST. Whether those goods might be sold after the manufacturer or after purchasing of the goods, whatever it may be, forget about the manufacture and sale. Under the GST, if goods are transferred from one person to another person, that is the levy point. Is it clear? Next one. Fourth one. Service tax. Service tax was levied on the services where a person making a supply of, where a person rendering any service, there the person who is a service provider was liable for payment of service tax. And the service tax was levied and enjoyed by the central government. That means service tax is the revenue of the central government and central excess duty is revenue of the central government. So central government revenues are central excess duty and service tax, and VAT and CST. These two are state government revenues. So if there is any manufacture, central government will levy central excess duty. If there is any service, the central government levy service tax. And next, where there is a concept of the intrastate sale, the state government will levy VAT. Where there is a concept of interstate sale, state government will levy central sales tax. In such a manner, the central government and state government supposed to get the revenues. Now what happens, sir? These are the four major indirect taxes has been subsumed in GST. Subsumed in GST. These are the four taxes: the central excess, VAT, CST, service tax, no more. In all these places, collectively, we are levying only one tax, that is called GST. Are you getting my word? And apart from that, one more indirect tax we have one more type of the indirect tax, that is called customs duty. The customs duty levied on import or export of goods. Import or export of goods. It is not subsumed in GST, still it is collected and enjoyed by the central government itself. See, customs duty not subsumed in GST. Not subsumed. Still, if there is any import or export, we are liable for payment of the customs duty. But today, if there is any manufacture, no GST, only because of the manufacture, no need to pay GST. After manufacturing, if those goods are moved to some other person, there it will become supply. When it became a supply, then only we are liable for payment of GST. Is it clear? Please note down. This is the first point, first view. See here. Note down first these 5 types of the indirect taxes. These as a first example. Is it clear? Pause the video. Clear? The second one, these are the examples. Right? And again, pause the video, note down. Now, again, if you need this example, also note down. Third one. one person to another person, GST. Is it clear? Okay, so with effective from 1/7/2017, if there is any supply of the goods or service, then we are liable for payment of GST. Okay, so wherever there is a supply of goods or service, there we are liable for payment of GST. But again, one more thing you have to remember here, whenever a supply taken place whenever supply of the good or service taken place, first of all we have to classify it is as an intrastate supply and interstate supply. Whenever a supply of the good or service taken place, first we have to classify it is as a intrastate supply or interstate supply. So how can we classify a supply as an intra or inter? Simple. As you know, wherever there is a supply in between two persons, supplier and recipient, where the supplier location and the place of supply both are in same state. Remember, I am not considering the supplier and recipient location. I am considering supplier location and the place of supply. The place of supply concerned where the goods or services has been consumed, on the basis of which we will determine the place of supply, right? So where the supplier location and the place of supply are in same state, it is called intrastate supply. Suppose take an example where a person is intended to purchase a mobile phone. The recipient is located in Coimbatore. And the supplier is located in Chennai. Is it? Now the supplier location is Tamil Nadu. And what is the place of supply and where the good has to be delivered? Again, it is in Tamil Nadu. So the supplier location and the place of supply both are in same state. Then we have to say it is as a intrastate supply. When it is an intrastate supply, we are liable for payment of CGST and SGST. We are liable for payment of CGST and SGST. Suppose, see here, value of the mobile phone, that is called value of supply, 10,000 rupees, and the rate of GST applicable on mobile phone, it is 18%. When the rate of GST is 18%, half of the revenue goes to the central and half of the revenue goes to the state. Now the central government will charge 9% and the state government will charge 9%. Totally 900, 11,800. Is it? Now the supply taken from Chennai to Coimbatore, both are located in same state, that is Tamil Nadu. When supplier location and the place of supply both are in the same state, it is called intrastate supply. When it is an intrastate supply, we are liable for payment of GST. Now the supplier has to raise the tax invoice like this. Is it? Now when the recipient made a payment like this, 10,000 rupees goes to the supplier own pocket and the CGST will goes to the central government and SGST goes to the state government. Suppose under the earlier indirect tax system, what was the position? On manufacture, we were liable for payment of the central excise. And next, at the time of the sale, we were liable for payment of the VAT or CST. That was the position. But today, there is no such type of the classification. When the goods are moved from one person to another person, classify whether it is an intra or inter. If it is an intra-state supply, we are liable for payment of CGST or SGST. Suppose if the same situation taken place in union territory, then we are liable for payment of CGST and UTGST. Union Territory Goods and Service Tax. Suppose if any supply taken place Dadra and Nagar Haveli, Chandigarh, Daman Diu, as in all these are the union territories. When the supply taken place within the union territory, there we were liable for payment of the CGST and UTGST. Is it clear? Right? Note down the example. Pause the video. Right? First example is over. And this is the second example now. Right. Note down. Pause the video and note down. Is it clear? Right. Just I explained the concept of the intrastate supply. Now we are going to discuss the concept of the interstate supply. What is that? Interstate supply. When we can say a supply as a interstate supply, where the supply taken place, number one, in between two states. Suppose AP to Tamil Nadu, Tamil Nadu to Karnataka, Karnataka to Telangana, like this. Any supply taken place in between two states or in between two union territories. In between two union territories, like as Chandigarh to Dadra and Nagar Haveli, like this. So where a supply taken place in between two states or two union territories or state to union territory or union territory to state. These four situations shall be treated as interstate supply. Thereby, we are liable for payment of IGST. There we are liable for payment of IGST. Suppose take an example. Supplier located in Andhra Pradesh and the recipient, let us assume he is located in Tamil Nadu. Right? Now the supplier location, what is the supplier location? Andhra Pradesh. And where the goods has been delivered? Place of supply, Tamil Nadu. When the supplier location and the place of supply are in two different states, two different union territories, then such supply is known as interstate supply. Interstate means in between two states. Intrastate means within the state. Now interstate, in between two states. Hence here we are liable for payment of IGST. Now take an example here. Value of supply. Suppose here the value of supply is 10,000 rupees, and when it is an interstate supply, the supplier has to charge IGST in his tax invoice. IGST at the rate of 18%, which will be 1,800, totally 11,800. In such a manner, the supplier has to collect from the recipient, out of which 10,000 rupees will go to his own pocket, and whereas IGST concern 18,000 rupees, 1800 rupees. Who has to enjoy this 1800 rupees? Hmm? 1800 rupees. It is a supply taken place in between AP and Tamil Nadu, and absolutely we can say half of the revenue goes to the central, that is 900 rupees goes to the central. Now the balance, the half of portion will goes to the state government. Then which state government has to get the revenue? Whether Andhra Pradesh or Tamil Nadu? What is your answer? Wherever there is a concept of interstate supply, we are liable for payment of IGST. Yes, accepted. Out of the IGST, half of the revenue goes to the central. Yes, central government enjoying 900 rupees, and the balance of 900 rupees will goes to state government. Yes. Now, which state will enjoy this revenue? Whether the supplier's location or the place of supply location. That is AP or Tamil Nadu. Please participate. What's the right answer? AP or Tamil Nadu? Here, the balance of 900 rupees will goes to the Tamil Nadu, where the goods are consumed. Where the goods are consumed. Where the goods or services has been consumed, such state government will get the revenue. That is the Tamil Nadu. Even though goods are manufactured at Andhra Pradesh, but ultimately those goods are consumed at Tamil Nadu. Hence, the Tamil Nadu state government is eligible to get off of the revenue. That is the reason why the GST is a consumption based tax. GST is a consumption based tax. Why the GST is a consumption based tax? The state where the goods or services has been consumed, such a state government is going to get the revenue. That is the reason GST is a consumption based tax. Is it clear? So interstate supply. Pause the video and note down. Is it clear? Now, so wherever there is a supply of the good or service, wherever there is a supply of the good or service in India, first we have to classify whether it is an intrastate supply or interstate supply. If it is an intrastate supply, we have to charge CGST and SGST or UTGST. Is it? CGST goes to the central government, SGST goes to the state government. Suppose in the case of the UTGST, UTGST goes to the state government. Next, in case of the interstate supply, the supplier has to charge IGST. Is it? So in case of the IGST, half of the revenue goes to the central and half of the revenue goes to the state where such goods or services has been consumed. Is it? That is the levy concept of GST. Whether it may be relating to the goods or services, the concept is same. Just you have to identify the two factors. Number one, supplier location, and number two, place of supply. So on the basis of the supplier location and the place of supply, we will determine whether it is an intrastate supply or interstate supply. If it is an intra, we are liable for payment of CGST and SGST. In case of interstate supply, just we are liable for payment of IGST. Is it clear? Now pause the video and note down. Is it clear? Good. So up to this part we discussed what is the meaning of the tax, and second one we discussed the differences between direct tax and indirect taxes, and the third one, background of indirect tax, that is before introducing of GST. Before introducing of GST, what was the indirect tax position? We discussed elaborately. And the next one we discussed about levy of GST on the basis of intra or inter. Is it clear? Any doubts up to this part? Right? So background of the indirect taxes and levy of the GST. See here, before introducing of the GST, if there is a service, the central government is supposed to charge the service tax. Is it? And if any person manufacturing the good, the central government will come and ask, sir, you are manufacturing a good, please pay central excise duty. Now, when the central government collected the central excise duty, now the state government will come into the picture while selling of the same good. And again, the state government will charge VAT on it. The manufacturer is supposed to bear the two types of the taxes. One in the name of the central excise duty and the another one is in the name of the VAT. And that to two different levy points. For levy point of the for central excise duty, the levy point is manufacture of the goods. In relating to the VAT or sales tax, the levy point was intrastate sale. You see, in case of the interstate sale, we were liable for payment of the CST. In such a manner, we were having different types of the levy points. But under the GST, there is no such type of the ambiguous situation. Simply, I can say that earlier, if it is an area of the good, the central government and state government independently they were levying the tax. Now, what they are doing? Simply, they came under an agreement or understanding that central government and state government, wherever there is a supply, the central government will call the state government, come here, charge your SGST and I will charge my CGST. Let me share the revenue. No more ambiguous situations, no more levy points. There is a supply of the goods, whether it may be a manufacturer, sale, wholesaler to trader, trader to customer, whatever it may be. There is a movement of the goods, it is a supply. Central government and state government combinedly they are levying taxes on it. Is it? And the next one, where a person making a service. Earlier, it is a purely the benefit of the central government. Reason the central government supposed to charge service tax. Now, what the central government giving an opportunity to the state? Central government calling state, come here, let me enjoy the revenue of the service also. So, whether revenue might be in relating to the good or service, there is no difference. Half of the revenue goes to the central and half of the revenue goes to the state. But the levy of the duty might be differ like this by classifying intra and inter. And the basic purpose of classifying of the intra or inter it is, the basic purpose of classifying intra and inter it is, the government has to know which state has to get the revenue. Is it right? When a supply taken place from Andhra Pradesh to Tamil Nadu, we have to know which state government has to get the revenue. Is it when a supply taken place within the state? And again we have to know which state has to get the revenue. For that purpose, just we are classifying it is as an intra or interstate supply. Otherwise, simply we can say one nation, one tax. That's it. But here, one nation, one tax, that is called GST. But only for eligibility of the revenue by the state governments, this GST we are classifying like CGST, GST, UTGST and IGST. And for these taxes, we have a separate act, CGST Act 2017, SGST Act 2007, and UTGST Act 2007, and IGST Act 2007. Is it? So this type of the 4 GST acts we have. And apart from that, there is another act. Sorry. Yeah. Is it here? No. There is another act which is called Compensation Cess Act. The basic background for introducing of the Compensation Cess Act, it is by introducing of the GST, what about the state governments are losing revenue? Such loss is compensated by the central government. Sir, by introducing of the GST, how the state government losing the revenue? Simple. See here. Let us assume this is the picture of the India, Tamil Nadu, Andhra Pradesh, Telangana, and Karnataka, Kerala. Right. Before introducing of the GST, directly or indirectly, we supposed to depend on the state of the Tamil Nadu for manufacture of the goods. Suppose if you want to get any bike parts or luxury car parts, you have to purchase from the Tamil Nadu. That means it is a big hub for manufacture of the different types of the goods. Under the earlier indirect tax system, if a good has been transferred from one state to another state, we were supposed to charge CST, Central Sales Tax. Reason, it is a interstate supply. When it is interstate supply, the state government will charge central excise duty. It's okay. and the Tamil Nadu government was enjoying with the CST, Central Sales Tax, goods manufactured in Tamil Nadu. Hence, the Tamil Nadu state government was supposed to get the revenue. Sir, under the GST, where the goods has been consumed, where the service has been consumed, no? Yes. But under the earlier indirect tax system, where the goods movement has been commences. Where the goods movement has been commenced. So that under the earlier indirect tax system, the Tamil Nadu state government was supposed to enjoy with CST, Central Sales Tax, huge amount of the CST. Reason? Telangana people, Andhra Pradesh people, Karnataka and Kerala people, interlinked to the different types of the products, we are directly or indirectly depend on the manufacture of the Tamil Nadu. When good is manufactured in Tamil Nadu and forward to the some other state, the state government is supposed to charge CST. So the Tamil Nadu state government was getting huge amount of the CST. Now by introducing of GST, what will happen? By introducing of GST, GST is a consumption based tax. What's that? Consumption based tax. Now by introducing of GST, what will happen? Even though good is manufactured in Tamil Nadu, such revenue goes to other states. Now why the Tamil Nadu state government has to give the consent for this type of the indirect tax structure? So that Tamil Nadu and Maharashtra and some other states was reluctant to give consent for the GST. Reason? Sir, under the earlier indirect tax system, we were enjoying with the central sales tax. Reason, where the goods movement commences, such state government was eligible for getting the revenue. But under the GST, GST is a consumption based tax. Where the good has been commenced, where the goods has been consumed, where the service has been consumed, such a state government is going to get the revenue. So even the goods are manufactured in Tamil Nadu, under the GST system, we are not going to get any revenue. So that why we have to give the consent for this? Now the GST council said, sir, please don't misunderstand this system. This system will yield a benefit for all the states on the basis of their consumption. It is a healthy environment for equal development of the country. Please consider our provision. Please consider this provision. You will enjoy in the near future. Suppose by introducing of the GST, if you are losing any revenue, we will compensate. You don't bother about it. That is a promise of the central government. Okay, central government promised and Tamil Nadu, Maharashtra state governments and other state governments have been given the consent. Now, how the central government going to compensate? For that purpose, the government levying separate cess which is called compensation cess. Compensation cess only on specified product like as luxury goods, like as luxury cars, vehicles, etc. And next, aerated water concern cool drinks like that. So on which the central government levying compensation cess, and compensation cess won't be shared with any state government. It will keep in separate bank account like as a fund. Such compensation cess collection will be used only to compensate the states which losing the revenue by introducing of GST. You getting my word? So compensation cess is levied by the central government to compensate the revenue of the states. That is simply we can say that by introducing of the GST, whatever the state losing revenue, by comparing with the previous trends, such a state government going to get the compensation from the central government. But as promised by the central government, it will be valid only for 5 years. Actually, it has to be elapsed in the year of the 2022. But again, government given a notification that it is extended for one more year. Extended for one more year. That is, it is valid for 2023 also. And at my opinion, the government may not be in a position to abolish the Compensation Cess Act. It will be continued for some more period. And it could be my opinion. It is my opinion. Right? Actually, while introducing of the GST, the government promised to the state, we will give an assistance only for a period of 5 years. But the government is going to give an assistance even in the 6th year. So that like this, we have a CGST Act, SGST Act, UTGST Act, IGST Act and Compensation Cess Act. Sir, which one we are going to learn for our CMA inter syllabus? Whether do we have to learn all these type of the acts? That is the question, no? Simply remember my words. just we are going to discuss CGST Act CGST Act 2007. It consists around 174 sections. Consists around 174 sections, out of which just we are going to discuss 50 sections at CMA interlevel. So then what about the SGST? No need to learn. Not only for academic purpose, even for your practice purpose also. If you learn the CGST Act, automatically deemed to be learned the SGST. SGST Act consists the mirror provisions of the CGST. That is whatever the content given under the CGST Act in relating to the levy, calculation, computation, input tax credit, etc. The same matters has been specified in the SGST Act. So then why the SGST Act has to be prepared? Nothing but every state government should have a right to levy of tax on a transaction. Just to get the power to levy SGST, a separate act has been introduced, that is called SGST Act. Academically, we are not going to learn SGST Act even at the final level also. But about the act we are learning, CGST Act, the same provisions has been specified in CGST and UTGST Act. And the IGST Act concern, yes, we are going to learn at the interlevel, CMA interlevel, just we are going to learn approximately 4 or 5 sections, that's it, IGST Act. And the remaining provisions, remaining sections we will discuss at the final level. Is it? Totally our syllabus consists only CGST and IGST Act. And majority of the portion CGST Act only the IGST Act only we will get the reference only at the 4 section. And I will provide the reference where we are learning the IGST Act. I will provide a reference of the IGST Act. Otherwise, whatever the provision we are learning, such provision only from the CGST Act. Section 1 to around 50 1 or 2 sections might be could be differ. It will be depend upon the applicability of the syllabus. Is it clear? So in today's session, just we discussed up to this part. The first one, what is the meaning of tax? Second one, direct tax versus indirect taxes. Number 3, background of indirect taxes. And fourth one, levy of indirect taxes, background of indirect tax concern. We discussed about the central excise duty, VAT, say central sales tax, service tax, etc. Now the levy of GST. Here we discussed the intrastate and the interstate supply, how to determine the intrastate and interstate supply, and thereafter we discussed about the concept of the acts of GST. How many acts are there and what are the acts we are going to learn at the CMA interlevel. Is that right? And in the next session we are going to discuss the concept of the input tax credit. Just I am going to give a overview about the input tax credit, and it is the heart of the GST. Without having the knowledge about the input tax credit, if you are going to learn the concept of the GST, it's nothing. First you have to know what is the meaning of the input tax credit and its background and the manner of availment of input tax credit under the GST in the next session. After getting knowledge about the input tax credit, let me start with the book material, book content. Okay, that's all for the day. The remaining concept we will discuss in the next class. Have a nice day.